Good morning and welcome back to BIFA TV, your daily dose of industry information. Today's episode is once again What the Papers Say, and we're joined by Ian Matheson for this week's headlines. So Ian, thank you so much for joining us this morning.
No problem, Brooke. Should we get stuck into it?
Yeah, sure.
Well, as you know, a couple of days ago there was a major diplomatic breakthrough in the Middle East that could have some pretty significant implications for the freight industry.
Of course.
The US and Iran, they announced a tentative peace agreement aimed at ending months of conflict. I believe it's due to be signed in Switzerland on the coming Friday. But the news could obviously be out of date by the time this episode airs with the way things change
Of course,
at the moment. But markets have already responded positively, and oil prices have been falling on the hopes that shipping movements through the region will normalise.
And just how important is this development for the industry?
I think it's potentially one of the most important stories of the year.
Yeah.
For months, obviously, freight operators have been dealing with uncertainty surrounding the Strait of Hormuz, and disruption has affected energy markets, shipping schedules, insurance quotes, and ultimately transport prices.
Of course,
Of course, if the agreement holds and shipping traffic can return to normal quickly, we could see lower fuel costs, improved supply chain reliability, and greater confidence across global markets. But of course, we shouldn't forget the agreement remains tentative and several major issues remain unresolved.
Of course, yeah, it'll definitely be one to keep an eye out on. And now, what news do you have for us from the wider industry?
Oh, well, from the wider industry, air cargo, should we start with? IATA has revised its outlook and expects growth volumes to slow significantly, increasing by just a fraction this year. And that reflects a much tougher operating environment than many anticipated.
And just how concerning is that slowdown?
I think it's a signal that the market is entering a more cautious phase. Early this year, cargo demand looked relatively strong, but higher operating costs and ongoing geopolitical tensions have changed the outlook considerably. But I guess what's important really is that we're still talking about growth rather than contraction. And operators are going to have to work much harder to protect margins and maintain service levels.
Sure, yeah. And now moving on to ocean freight, I know it's a different story over there, isn't it?
Yes, it is. Yeah. Orders for container ship new builds continue to be placed across multiple market segments. Carriers are ordering vessels ranging from smaller ships for regional trades to some of the largest container vessels in existence. Many operators, of course, are preparing for future environmental regulations by investing in more fuel-efficient tonnage. Well, I guess, despite today's challenges, shipping companies appear to be positioning themselves for the next decade of trade growth.
And of course, we're seeing these investments coming at a time where the freight rates are continuing to climb.
That's right again, Brooke. Yeah, last week's Composite World Container Index from Drewry showed that the global container shipping rates increased by about 3%, I think it was, extending a trend that has been developing across key trade lanes. The higher prices are driven by several factors, which we've touched on before. Capacity management remains a major one, but we've also seen continuing disruption across some of the global trade routes. And of course, when capacity becomes tighter and demand stays relatively stable, rates tend to move upwards. And for shipping lines, of course, that's good news for their profitability, but for importers and exporters and the freight forwarders that serve them, it means higher transport costs and more pressure on supply chains.
Yeah, of course. And one company we've seen benefiting from that is MSC, haven't they?
Yeah, again, right, Brooke. The carrier has reportedly achieved a record share of the global liner shipping's market overall capacity, strengthening its position as the world's largest container shipping line. But the MSC has been expanding aggressively for several years, and that's been through vessel acquisitions, new build programs, and strategic network development. But reaching a record market share demonstrates just how much consolidation and scale matter in container shipping. Larger fleets provide flexibility, efficiency, and greater ability to react to market conditions and changes, at the same time, it raises interesting questions about competition and market concentration across the industry.
And now, before we wrap up today's episode, is there anything else you want to add?
Yeah, I thought we could end with a bit of news about the Football World Cup. BIFA used the tournament to emphasise the key role that freight and logistics plays in the success of major sporting events.
Yeah.
Of course, long before the first whistle blew, logistics professionals have been working behind the scenes to move team merchandise, broadcasting equipment, hospitality supplies, medical equipment, retail products, and so much more. And of course, while the players battle it out on the pitch, it's actually the sophisticated global freight networks that operate seamlessly behind the scenes that underpin the tournament. And of course, without the logistics team, there would be no World Cup, and a World Cup that hopefully Scotland will win.
There certainly wouldn't be. Like you said, there's a lot going on behind the scenes of that. So thank you so much, Ian, for this update. I know that our members will find it of use.
No problem, Brooke, as always.
As always, the links to all of the reports and the articles that we've discussed in today's episode will be in the description below. That's all for today's edition of BIFA TV, your daily dose of industry information.